Hello everyone, and welcome back to the channel for your daily crypto market update. It is Wednesday, the 2nd of July 2025, and we have a lot to unpack today. The market is at a fascinating and frankly a very tense crossroads. The big question on everyone's mind is the recent bull run out of steam, or is this just the calm before the next massive leg up? We're seeing some critical signs that could point in either direction, and we're going to break it all down for you. But before we dive deep into the charts and the news, you know the drill. This content is for informational and educational purposes only. It is not financial advice. The crypto market is highly volatile, so please always do your own research, consult with a professional financial advisor, and never invest more than you are willing to lose. My goal here is to give you the data and the context so you can become a more informed participant in this incredible space. Alright, with that important note out of the way, let's get into the state of the market. The overall sentiment take can best be described as tense optimism. It's a strange mix, I know, but it accurately reflects where we are. The optimism comes from the fact that we've had an incredible second quarter. We've seen new highs on many assets and a massive influx of retail and institutional interest. The Crypto Fear and Greed Index, a great barometer for market sentiment, is currently sitting at a greed level of 78. Now, that's still very high, indicating strong bullish sentiment, but it's a noticeable cooling off from the extreme greed levels of 85 and above that we saw just last week. This pullback in sentiment is where the tension comes from. The market has been on a tear, and now it's taking a breath, looking around for its next catalyst. And boy, are there some major catalysts on the horizon. The total crypto market capitalization is currently hovering right around $4.8 trillion. That's down about 3% over the last 24 hours, a pullback driven primarily by the leader of the pack, Bitcoin. So let's start there. As of this recording, Bitcoin is trading at approximately $118,500. Yesterday, we saw a powerful push towards the monumental $120,000 level. The market was electric. It felt like the breakout was inevitable. However, it hit a wall of sell orders right around $119,800 and was rejected quite firmly. This rejection has caused a cascade of short-term liquidations and has brought us back down to this crucial support zone we find ourselves in now. This price action isn't necessarily bearish in the grand scheme of things, but it is a significant event. The $120,000 mark is more than just a number, it's a massive psychological barrier. Breaking through it would have likely triggered a fresh wave of FOMO and media attention. The failure to do so, for now, has injected a dose of reality and caution back into the market. Looking at the technicals for Bitcoin, the picture becomes clearer. The key support level to watch right now is $115,000. This level has served as a strong foundation during our ascent and also aligns closely with the 50-day moving average on the daily chart. A sustained break below this level could signal a deeper correction, with the next major support zone sitting around the $105,000 mark. On the upside, resistance is clearly defined at that $120,000 psychological peak. We need to see a decisive daily close above that level to confirm the continuation of the uptrend. Volume has been decent but not spectacular. The push towards 120,000 was on relatively lower volume than previous major breakouts, which might have been a leading indicator that the move was losing steam. The Relative Strength Index, or RSI, on the daily chart has cooled off from overbought territory, moving from the high 70s down to around 62. This is actually a healthy sign. It suggests the market is resetting, potentially building up strength for another attempt at that resistance. On-chain data shows a slight uptick in Bitcoin flowing onto exchanges over the past 24 hours, which typically suggests some holders are taking profits or are preparing to sell. However, the long-term holder supply remains incredibly strong, indicating that the diamond-handed investors are not fazed by this short-term volatility. So for Bitcoin, the story is one of a healthy, albeit sharp, pullback after failing to clear a major psychological hurdle. The next few days will be critical in determining if this is a consolidation phase before the next leg up, or the start of a more significant correction. Now, let's shift our focus to the queen of crypto, Ethereum. Ethereum is currently trading at around $8,200. It has followed Bitcoin's lead in this recent pullback but has shown remarkable relative strength. While Bitcoin is down around 4% from its recent high, Ethereum is only down about 2.5%. This resilience is largely due to its own powerful, fundamental narrative that has been building for months. The recent Prog Electron network upgrade, which went live in May, has been a resounding success. We've seen a consistent decrease in average gas fees, making the network more accessible for everyday users and applications. Furthermore, the changes to staking withdrawals have been fully implemented and absorbed by the market, leading to a steady and healthy increase in the total amount of ETH being staked. This reduces the circulating supply and is fundamentally bullish for the asset. From a technical standpoint, Ethereum is in a very strong position. The ETH/BTC ratio, a key metric many traders use to gauge the strength of the altcoin market, is looking very healthy. It's been in a steady uptrend for the past 2 months, suggesting that capital is beginning to rotate from Bitcoin into Ethereum and other large cap altcoins. If this trend continues, it could be the spark that ignites a full-blown altcoin season. For Ethereum's price in US dollars, the key support level to watch is the $8,000 psychological mark. This was a previous resistance that we broke through last week, and we now need to see it hold as support. A bounce from this level would be incredibly bullish. If we were to lose $8,000, the next significant support lies at the $7,600 level. On the upside, the next major target for Ethereum is its previous all-time high, which sits just shy of $8,800. The RSI for Ethereum is also in a healthy spot, around 65, showing strong momentum without being excessively overbought. The narrative for Ethereum is clear. Strong fundamentals from recent upgrades are providing a powerful tailwind, allowing it to outperform Bitcoin during this period of uncertainty. Many analysts believe that once Bitcoin finds its footing and breaks 120,000, Ethereum's path to 5-figure prices will be very clear. Now, we can't analyze these assets in a vacuum. The price action we're seeing is heavily influenced by the broader macroeconomic landscape. And this is where the real tension comes into play for the next 48 hours. The single most important event on the horizon is the release of the United States Consumer Price Index, or CPI, data tomorrow morning. This is a primary measure of inflation in the US economy. For the past 6 months, we've been in a disinflationary trend, which gave the Federal Reserve the cover it needed to pause and eventually begin cutting interest rates, starting with a 25 basis point cut last month. This more accommodative monetary policy has been rocket fuel for risk assets like stocks and crypto. The market's currently pricing in a continuation of this trend. Analysts are forecasting a month-over-month CPI print of 0.2%. If the number comes in at or below this forecast, it would signal that inflation is still under control, and the market would likely react very positively. This could be the very catalyst that sends Bitcoin smashing through $120,000 and carries the rest of the market with it. However, if the CPI number comes in hot, say, at 0.4% or higher, it would be a major shock. It would signal that inflationary pressures are re-emerging, and it would pour cold water on the idea of further interest rate cuts from the Fed this year. In that scenario, we would almost certainly see a significant risk-off move across all markets. For crypto, this could mean a swift rejection from current levels and a test of those lower support zones we discussed for both Bitcoin and Ethereum. The entire market is holding its breath for this data point. It is the pivotal event of the week and arguably the month. Adding another layer of complexity is the ongoing regulatory discussion in Washington, D.C. We're getting more and more chatter about the Digital Asset Clarity Act of 2025, or DACA 2025 as it's being called. This is a bipartisan bill that aims to provide a comprehensive regulatory framework for digital assets in the United States. On one hand, the prospect of regulatory clarity is incredibly bullish for the long term. It would remove a massive cloud of uncertainty that has been hanging over the industry for years and would pave the way for more conservative institutional players, like pension funds, to allocate capital to this space. On the other hand, the devil is in the details. Early drafts and committee discussions suggest that while it provides a clear pathway for assets like Bitcoin and Ethereum, it may impose stricter rules on decentralized finance, or DeFi, and certain categories of altcoins. The bill is expected to be formally introduced for debate in the House later this month. Any news, rumors, or amendments related to this bill will cause ripples throughout the market. It's a long-term positive, but it could create significant short-term volatility as the market tries to price in the winners and losers from this potential legislation. Finally, on the macro front, we also saw an announcement from the European Central Bank yesterday. They have confirmed a firm timeline for the pilot program of their central bank digital currency, the digital euro, slated to begin in the fourth quarter of this year. This is another double-edged sword. On one side, it's a massive validation of the underlying blockchain technology and the concept of digital currency. It normalizes the idea for millions of people. On the other side, it represents a centralized, government-controlled competitor to decentralized cryptocurrencies like Bitcoin. The long-term impact of CBDC is a topic of fierce debate, but in the short term, news like this generally adds to the legitimacy and overall awareness of the digital asset space. So, with a complex macro backdrop in mind, let's turn our attention to a couple of other major altcoins that are making waves, Solana and XRP. Let's start with Solana. Solana has been an absolute beast. It is currently trading at $450, showing incredible strength and largely shrugging off the market-wide pullback. While Bitcoin and Ethereum are down, Solana is actually flat to slightly up over the last 24 hours. The narrative for Solana in 2025 has been one of redemption and performance. After being plagued by network outages in previous years, the network has been remarkably stable. More importantly, the rollout of the Fidance client, a new independent validated client developed by Jump Crypto, is progressing ahead of schedule. Early tests of Fidance have shown mind-boggling transaction per second, or TPS, capabilities, promising to make Solana one of the fastest and most scalable blockchains in the world by a long shot. This focus on core technology and performance has attracted a huge wave of developers and projects, and the price is reflecting that fundamental strength. Looking at Solana's chart, it's a textbook example of bullish consolidation. It has formed a beautiful ascending triangle pattern over the past few weeks, with a horizontal resistance at $460 and a rising trend line of support. A breakout above $460, especially on high volume, would be a very strong technical buy signal, with a measured move targeting well above $500. The key support to watch for Solana is the $420 level, which coincides with the rise and trend line of the triangle. Solana's performance is a key indicator to watch. When a major altcoin like this begins to decouple from Bitcoin's price action and chart its own course, it's often a sign of immense underlying strength and could signal that we are on the verge of that highly anticipated altcoin season. And finally, let's talk about XRP. XRP is a unique case, as its price is often less about broad market trend and more about its own specific, long-running narrative, the legal battle with the US Securities and Exchange Commission, or SEC. XRP is currently trading at $1.15. This comes after a massive surge last week where the price touched nearly $1.50. That surge was triggered by news of a partial, but significant victory for Ripple in the appeals court. The court upheld the previous ruling that programmatic sales of XRP on exchanges do not constitute investment contracts, a major win for the secondary market. However, the ruling was not a complete victory, as the court left the door open for the SEC to continue pursuing claims related to direct institutional sales from Ripple. So the market has had a week to digest this nuanced outcome. The initial euphoria has worn off, and the price has retraced to what appears to be a new support level of $1.10. This was a previous major resistance level for over a year, and the classic technical analysis principle is that old resistance becomes new support. The fact that XRP is holding above this level is a very constructive sign. The future for XRP remains heavily dependent on legal and regulatory news. Any further clarification on its legal status or a final settlement with the SEC would obviously be a massive catalyst. Until then, traders will be watching that $1.10 support level like a hawk. A break below it could see a full retracement of the recent rally, while holding it could provide the base for the next move up towards the $2 mark. So, to summarize and bring it all together for our forward-looking statement, the crypto market is in a state of delicate balance, a moment of high tension and high potential. We have a market leader, Bitcoin, that has proven the strength of a major psychological resistance level at $120,000 and is now testing key short-term support. We have a fundamentally strong Ethereum, outperforming the king and threatening to lead the charge for a new altcoin season. And all of this is happening against a backdrop of macro-level uncertainty, with tomorrow's CPI inflation data acting as a primary short-term catalyst that could break the market in either direction. The bullish case is simple: the CPI data comes in cool, the Fed's dovish path is reaffirmed, and this gives Bitcoin the fuel it needs to decisively break $120,000, pulling the entire market up with it into price discovery. The bearish case is equally simple: the CPI data comes in hot, fears of persistent inflation return, the market prices out future rate cuts, and we see a significant risk-off move, sending Bitcoin to test $105,000 and dragging the altcoin market down with it. My final thought for you today is this: in moments of high tension like this, patience is your greatest asset. This is not the time for impulsive, emotional decisions. This is the time to watch the key levels, understand the catalysts at play, and have a plan for both scenarios. The next 48 hours will be absolutely critical in setting the tone for the rest of July. Whatever happens, volatility is almost guaranteed, which means there will be opportunity for the prepared investor. That's all the time we have for today. Thank you for joining me for this deep dive into the markets. Remember to stay safe, stay informed, and manage your risk. I'll be back tomorrow to break down the CPI numbers and their impact on the market. Until then, take care.